In this video, we're going to go over the question that says the difference between the beginning cash balance and the ending cash balance for the company would equal. Well, this is the exact same thing as the net change in cash, right? Because step 4 and step 5 are a reconciliation step. So step 4, you have the you add your cash flow from operations, cash flow from investing, cash flow from financing to get the net change in cash. And then the difference between the beginning cash balance and the ending cash balance should equal the net change in cash. So if you find a net change in cash, you have found the difference between the beginning and ending cash balance. So how do you do that? Well, you're just going to have to find cash flow from operations, cash flow from investing, and cash flow from financing. And so that's what we'll do. So in this problem, we'll do cash flow from operations. So we're going to start with net income and net loss. So this is going to be $180,000, and I've already put the numbers over here. So I'll just highlight in yellow when we go over them. And then we're going to look at current assets, right? So there's no depreciation, there's no gains or losses in any of these things. So if you look here, you don't see any depreciation or gains or losses. And then we got to look at current assets and current liabilities. So current assets, these are the list of current assets. If it increases, we subtract. If it decreases, we add. So accounts receivable increased by $7,000. So that's going to be a subtraction. So you'll see here $7,000 minus. Then we have inventory decreased by $17,000. So that's going to be a plus. So you'll see $17,000 here plus. And you have supplies increased by $26,000, so that's going to be $26,000 minus, and those are all the current assets. So now we need to look at current liabilities. Current liabilities, if it increases, we add. If we decrease, we subtract. So accounts payable increased by $36,000, so I am going to increase this by $36,000, and then unearned revenue decreased by $49,000. So whenever you decrease on the current liability side, it's a minus. So minus 49. And I add all of those up and I get $151,000. So now I go to investing activities. Again, remember what investing activities are. Investing activities are just long-term assets. If I buy long-term assets with cash, it's a minus. If I sell long-term assets and receive cash, it's a plus. And these are all the long-term assets in case you forget the name. So I'm going to look for my long-term assets, and there's land and equipment. These are the only two. The others are not long-term assets. So you purchase land using cash for $113. So since I paid cash for the land, $113 is going to be a minus. Okay. Then it says you sold equipment and received cash for $121. So since I received $121 cash, that's going to be plus. And when I add those two together, the negative and the positive, I get $8,000 positive. Now we go to financing. When I go to financing activities, right? Financing activities again are these two sections. It's going to be either equity, selling stock, receiving cash, purchasing stock with cash. So any one of these, right, you would include. So if you sold stock and received cash, you add. If you purchase stock with cash, you subtract. You pay dividends with cash, you subtract. And over here, if you borrow money, you notes payable, you add. If you pay off a debt, a long-term debt, then you subtract. So here we've got two things. The company sold stock receiving cash of $75,000. So they sold stock and they received cash of $75,000, so that's going to be positive. And then it says that they pay cash dividends of $69,000. So we're going to have to minus $69,000, and we sum those together and we get $6,000. So now we have operating, investing, and financing. When we add these three together, we get $165,000, and that is your answer. Okay, $165,000, that is your answer. Okay, so when they ask for the difference between the beginning cash balance and the ending cash balance, remember that's the same thing as asking for the net change in cash, which is the sum of operating, investing, and financing activities. All right, good luck.